Hi there and welcome back to Blue Mountain Tutorials YouTube channel. Today, we're talking about the 10 habits of successful investors. Before we start, please subscribe and hit the bell icon. Smash the like button and leave a comment with anything you want to ask. Investing can be intimidating, but it doesn't have to be. By following these habits, you can increase your chances of success in the stock market and build wealth over time. Habit 1. Start early. The first habit of successful investors is starting early. The earlier you start investing, the more time your money has to grow. The power of compounding means that your money will grow exponentially over time, giving you a much larger return on investment than if you had started later. If you start investing at age 25 and save just $100 a month, you could have over $500,000 by the time you retire at 65. Habit 2. Have a plan. Successful investors have a plan and stick to it. This means setting investment goals, determining your risk tolerance, and creating a diversified portfolio. It's important to have a long-term perspective and not get caught up in short-term market fluctuations. Habit 3. Diversify your portfolio. Diversification is key when it comes to investing. This means spreading your money across different types of investments, such as stocks, bonds, and real estate. This helps to minimize risk and maximize returns. Habit 4. Stay educated. Successful investors are always learning and staying up to date with the latest financial news and trends. This means reading books, attending seminars, and following experts in the field. Staying informed will help you make better investment decisions. Habit 5. Invest in yourself. Investing in yourself is just as important as investing in stocks and bonds. This means continuing your education, improving your skills, and taking care of your health. By investing in yourself, you increase your earning potential and improve your overall financial well-being. Habit 6. Be patient. Successful investors have patience. The stock market can be volatile in the short term, but over the long term, it has historically produced solid returns. It's important to have a long-term perspective and not get discouraged by short-term market fluctuations. Habit 7. Keep emotions in check. Emotions can play a big role in investing, but successful investors keep their emotions in check. This means avoiding knee-jerk reactions and making decisions based on sound investment principles. It's important to stay level-headed, even during market downturns. Habit 8. Be disciplined. Successful investors are disciplined. This means sticking to their investment plan and avoiding impulsive decisions. It also means regularly saving and investing a portion of their income, even when it may be tempting to spend it on something else. Habit 9. Avoid debt. Successful investors avoid debt. This means paying off credit card balances and other debts, and only taking on debt for investments that have the potential to generate returns. By keeping debt under control, you free up more money to invest and build wealth. Habit 10. Review your portfolio regularly. Finally, successful investors review their portfolio regularly. This means checking on your investments, rebalancing your portfolio, and making adjustments as needed. By regularly reviewing your portfolio, you can ensure that your investments are aligned with your goals and that you're on track to achieve your financial objectives. In conclusion, these are the 10 habits of successful investors. By following these habits, you can increase your chances of success in the stock market and build wealth over time. Remember, investing is a marathon, not a sprint. So be patient, stay informed, and stick to your plan. Thanks for watching, and be sure to like and subscribe for more financial tips and strategies. Until next time, happy investing!